Hi folks, this is Sean Hyman from Chart of the Day again, and I wanted to talk to you about how to spot a strong trend from across the room. Many times I find that traders have trouble determining the trend direction, and I want to show you a way that you can, really just practically tell this from across the room, literally. And the way it is, and this is not a magic formula, but it's three moving averages. It's three of the most common moving averages, and this is on daily charts that we'll be looking at. So that means each candle is 1 day in length, a 24-hour period, and they go back about a year is what I've got on my charts. So a daily chart going back 1 year. And I've got a 50 SMA, which is the black line, the 100 SMA, which is the purple line, and the 200 SMA, simple moving average, which is the green line. And when they're in perfect alignment, which is in a downtrend, the 50 on the bottom closest to the price, the purple in the middle, and then the 200, the longest period moving average on top, that is your best scenario. And when they're spread apart, when they're all heading downward and the price is at or under one of the moving averages, that's your best scenario. That's a strong downtrend, and you want to be looking for selling reasons to sell and not buy. In other words, short the pair. I'll show you another pair that's another example headed in the other direction. This is the Aussie CAD. 50 SMA is up, the purple 100 SMA is up, the 200 SMA simple moving average is up as well. All three wide and separated apart, so therefore the trend is up. And again, if I were back across the room, I could see these three colored lines in which direction they were headed and if they were in proper alignment or not. So this is a good example. So I would want to be looking for buying opportunities. Now, does this mean that each and every day, every moment of every day, this pair is going to go up? Heck no. There are pullbacks within uptrends. Pullback here goes up, pullback, upward, pullback, up, pullback, up, pullback, up, etc. That's the mechanics of the market. So it'll go a little too far, it'll pull back because it consolidates that move and then goes up again, etc. So, but you want to be looking for technical reasons to buy when you feel that the pullback is over. So you've got all three of your moving averages up, you look for the pullback. You can even go to a smaller time frame like a 1 hour or 4 hour chart. Use some other indicator to help you see when the trend may be turning. Now I want to show you bad examples, so that you know ones that you might want to pass on. See how these moving averages are pretty much sideways and they're all clustered together. This is a trendless move, a very sideways market. So Euro Swiss would be out unless we were wanting to pick some range trade in particular, but I generally like to find trends. Here's one that's not quite as clean. You've got your 50 SMA on top, it's kind of slumping down. You got your purple one that just crossed over, and your green one, your 200 SMA on bottom. So they have gotten in the right order, but they're not separated out good yet. So this would be one I would keep my eye on to look to see if the price action heads higher, it will start to separate these out in proper formation. And so let's take a look at some others. Here's pound yen. It does have the black, the green, and then the purple. So they're a little out of order there. Your purple should be in between them to be in a perfect alignment, perfect order. Yet they are mostly like you have two of them pointed down and one of them pointed, the 200 SMA pointed kind of sideways. So being that they're all not pointed downward, and I can pick other pairs out there, because remember, most of your trading stations you'll trade on will have 20 or 30 pairs. Look for the cleanest trends. Look for the trends that your 7-year-old or your 12-year-old could tell you what looks good. This one's a little jumbled up, but you can tell that the overall move is downward because they're all pointing somewhat downward. But again, it's not the cleanest of moves. Again, here's one of your best pictures back to our original chart. You've got everything in order, your smallest and your medium and then your largest or longest moving averages. The price is below the moving averages. it hits them, it heads downward. Coincidentally, had this broken up above this, guess what? We would want to look for it to come closer to the next moving average. Sometimes they'll touch them, sometimes they won't. But once once it gets to where it's in the vicinity of getting close to touching it, that's when we would want to have our little internal radar go off to start looking for shorting opportunities. Just like on this other one, let's see, let me pull up here and back up. On the uptrend, we had all our moving averages spaced out and headed upward and all in proper alignment with the smaller 50 period moving average up here, the medium 100 period moving average right there, and the 200 SMA, the longer period moving average down here, all pointing up, all spaced out. Price generally above the 50 SMA, but it had pulled back. So anytime it dips below these SMAs, we want to either look on smaller time frames to see when the pair may turn. Many times under normal circumstances, this would come a little more closer to the purple SMA. I'm not sure if that will happen because we are dealing with the Aussie CAD here. The Aussie is fundamentally the strongest of all the currency pairs out there. So Aussie dollar, Aussie yen, Aussie CAD, etc. When you're dealing with the most strong currency out there, sometimes it won't make it all the way down before buyers come in and bid it back up, in other words, buy it back up. So you want to look for the turning point and for it to head back above the 50 SMA, and then you want to buy again. Again, on smaller time frames, you can even look to try to catch this turning point even better, even before it gets above the 50 SMA. It's fine, but you want to have an upward bias, a buying bias, when you see these moving averages like the way they are. So I hope that this will help you to sort out trends and to see the direction that you ought to be trading. It's not a miracle system. It's just using some of the most commonly looked at moving averages that big institutions routinely look at for their trend direction. Flip through all your charts, all 20 or 30 or whatever your charts. Write down or note the top few best looking trends, whether an uptrend or downtrend, doesn't matter, and look for ideal entry points on shorter time frames like a 1 hour or a 4 hour time frame. Pick one of those two time frames for entry. Don't look at both charts because they'll end up usually confusing you when you look at several time frames at once. I would encourage you to look at two charts. One, the daily chart, because that's where you're going to get your trend direction from, and two, a smaller time frame chart like an hourly chart to hourly or 4 hour, whichever one you wish, for your entry. So you can look here on a 4 hour. Once this price comes back above these cluster moving averages, it's going to have less resistance than it will presently. On the 4 hour, on the 1 hour, you can see how it's progressing. It'll probably look a little bit better. It's almost about to overcome the clustering of moving averages here. So once the price starts staying consistently above the moving averages there, it stands a better chance of upside when we're looking for the larger turning points that we see in process on the daily charts. So that is our chart of the day. Again, I love to look at a lot of these currency crosses because they trend well, they have long trends, and they have nice volatility, and the trends tend to outdo the majors being dollar pairs, euro dollar, pound dollar, dollar Swiss, etc. Thanks so much for watching. Bye-bye.